Welcome back, my passive income investors, like to a Sunday live stream where we're going to be going over so many topics. I couldn't really jam them into one video, and I thought it'd be fun because you guys can ask questions along the way. So kind of the itinerary for this live stream on my really janky written whiteboard here, just to give you guys some frameworks. We're going to be going over Facebook stock. We're going to talk more or less on the growth side of it first with the large cap. So we're going to go Facebook, Alibaba, Tesla. I've got some opinions on. We're going to get into the smaller cap sector where I'd be interested in that aspect of things. We're going to get into the crypto markets because there's been a lot of interesting hacks going on with companies that I've personally been working with and having some crazy discussions about. I mean, like $500 million just went missing. And then more prevalently for most of you, we're going to be diving down into my dividend stock watch list. I have about 5 or 6 dividend stocks. I'm going to start accumulating into the portfolio. I might even start selling down some of my VYM to get some positions in these because some of them are trading down quite a bit right now. They're making them very appealing. We're going to talk about the markets moving forward, what I think, well, just some of my general opinions, of course, because that's all speculative by nature when we talk about what the markets are going to look like in the next 6 to 12 months. And then finally, I want to talk about some movies, baby. We're going to talk about, I've been watching so many business films lately with my girlfriend that I was like, maybe I should be mentioning some of these because, man, these things have been absolutely incredible documentaries and stuff coming out on Apple TV and Netflix and stuff like that. So first and foremost here, folks, we got to talk about the Facebook stock because, many of you are aware I'm completely hooked on the virtual Oculus here, my Quest 2. And I've literally been playing this thing so religiously. It's been getting me working out and actually like getting some physique going on. So I got to give Facebook some credit on that end because the stock ain't giving me any credit at all here. But the reason I want to talk about Facebook is I'm actually like really concerned about a few things, and it's highly related to TikTok. I can imagine a lot of you out there are using TikTok, and if you're not, I would be blown away. But everybody I know that has touched TikTok as a social media influencer, or even somebody that's just generally interested in social media and posting stuff, TikTok is dominating their life right now. I've seen this happen in my personal life, a lot of my personal friends, and it's making me very concerned about YouTube and Facebook because YouTube, I've been watching side-by-side comparisons of their shorts, and people have been posting the same content and seeing much better results, unfortunately, from TikTok. I don't know how TikTok has their algorithm baked in, but it's offering better conversions. And I think that is going to really hinder the core fundamental of Facebook, considering on that last earnings call coming into the new year, the worst earnings call I've ever heard out of Facebook, they really said that small businesses were seeing less conversions on the ad spend. And that is horrifying to me because you don't need to spend any ad dollars really on Insta or on TikTok to get a crap ton of views, right? And I've noticed that a lot of people, including my girlfriend, say, you post stuff to Instagram, you get no views, you post stuff to Facebook, you really don't get a lot of views unless you're paying to play the game. Facebook, YouTube are becoming pay-to-play platforms, and TikTok is dominating that world because you don't have to pay anything, and you can get exposure to hundreds of thousands of people posting 7 to 10-second videos, and it works. I mean, I've been posting stuff to TikTok, seeing a lot of traction from that end. Their system, I've been playing around with it aggressively lately from like the promotional aspect, from getting sponsorship deals and things like that. TikTok's platform by far dominating the space, right? So I'm really concerned moving into the next earnings cycle for Facebook because I feel like they have some of this future forward-looking stuff going on. They haven't fully monetized all their systems. I'm trying to sell stuff on the marketplace right now, still like Facebook Marketplace, but I don't like the fact that, again, TikTok is dominating the conversion world, and it comes down to dollars and cents, man. If you can't make money putting ad dollars into the platform, how is Facebook's ad revenue going to convert moving forward? It's not going to look good, right? So let's move on to Alibaba. Alibaba is one that I'm sitting on, and I'm waiting to see what Amazon's earnings are going to look like because coming into May, I think Amazon posts first. I think it's May 5th or May 10th. I know they're like a week back-to-back between Amazon and Alibaba because obviously I have a huge stake right now in Alibaba stock that I'm not looking to hold into the long term. So I am taking on some short-term speculative risk here. But Alibaba for me right now is just to sit and hold. I'd rather hold it than Amazon, but I'm so curious to see with the lockdowns that just happened in China. That's what the media is really pushing right now, is that China's been locking down. But considering Alibaba's primarily an e-commerce and technology platform, isn't that what made Amazon and all the tech platforms do so well through the March 2020 period? So I don't know why they're spinning it off as though it's a bad play into the future when I think the lockdowns are going to just benefit them better in China. And the fact too is how many of these platforms in the US are taking advantage of things like Alibaba, right? I mean, if you roll back and you take a look at Amazon and the vast majority of what they're selling through Amazon is coming from China anyways, right? I really wish Amazon would reveal how many people are just loading up things from Alibaba's website and shifting it over to an Amazon warehouse. Cause I feel like, Alibaba's just got so much going for it, man. A long term, I'm bullish as hell on that company. I don't really care what happens if it gets delisted. I'm sitting on my one utility, 26% up in a month. We're going to come back to the utility sector. I got some really good list of dividend stocks that I want to talk about here. But what's your average price on Alibaba? So my average price is probably about 105. It's right around the 100 range. I'm basically flat on the position as it sits today since I recently bought another huge percentage basis in it. But honestly, if you own Baba, I would try and hold it for the long term. I don't really want to hold it for the long term, to be honest. I want to take some position into the long term. Obviously, like I'm going to hold some core shares because I really want to have some exposure to the Chinese economy. But in the midterm, I just don't understand how it can continue trading so low when we're talking about value and EBITDA, which is the only thing valued in this market. Because again, guys, when we get into the small cap stuff here, you got to understand, like, if it doesn't have positive EBITDA, like no one gives a shit about it, right? And if it has a high valuation, it's having a hard. It's just things that are. This is a weird market, right? And I just don't understand the rhetoric surrounding Baba, as most of it was just satire that's really shifting now and pushed toward Russia. And the fact that their government's so accommodative right now toward the stock market, the fact that Baba picked up more share buybacks, like I just can't see Baba trading much lower in the next 6 to 12 months. So I'm just going to hold it, see how it pans out. I'm speculating in the short term, but I just think it's an easy park and play for now for short-term growth. But again, speculating, so don't follow that trade because God knows. I'm holding Baba for 10 years, probably the best thing you can do. I mean, obviously, that's why we're getting the Ray Dalios, the Charlie Mungers, the Kevin O'Learys of the world. Like that rhetoric is just really starting to shift relatively drastically here in the midterm. So I think the media push that's changing, the fact that the government's accommodative, the fact that, again, the lockdowns, I don't think make a difference in China because these are tech platforms. So I'm very bullish on Baba over most of the US e-commerce plays. I like Shopify, I like Amazon, but they're just excessively valued for their businesses currently. So I would just be a little bit, for me personally, I'm a little more bullish on Alibaba. So let's talk about Tesla here real quick. Tesla's a conversation of choice topic that's a challenging one. The reason I'm saying it's a challenging topic because Elon has made a lot of promises that aren't coming true. And when I look at what they're doing into the future, it makes me more concerned about the fundamentals of what we need to see happen, which obviously I don't care about the robotics. That's too far out forward looking. The most things that I'm paying attention to are self-driving. And the reason that I want to fixate on self-driving so drastically is because I feel like they can value their business off the car model alone. Their margins on their cars are amazing. They make a lot of margin off the software they already have. It's great. It is what it is, right? But the real money is going to come into play with obviously the taxi network, which is what everyone's been fixating on. Elon Musk keeps reiterating it that, hey, we can get there by the end of this year. By the way, he said that every single year up till this year for the last 3 or 4 years. And my concern now is that they're focusing on actually building out their own taxi network by making their own taxi cars. I think that's going to be related to regulatory issues. I really think Tesla's going to try and fight regulators by making a taxi network where it's going to work most efficiently. But that's what scares me the most about it. I don't think they're going to be allowed to just issue a taxi network if you have full self-driving. I think for as long as you're sitting behind the wheel, it's going to get better as the technology evolves, but they're never going to let you just take your car and then just send it out. Like, I don't think that's coming anytime in the next few years, unfortunately. And my biggest concern with self-driving right now, guys, is how good is the AI actually getting? I mean, God, man, it's just Tesla is such a hype stock that like the valuation for me holding it always irks me a little bit because I've been in it for so long. I've made so much money. I'm up 50% on the shares I'm still holding. But when you look at everything that is currently AI driven, how good is it? I mean, ask yourself that. Siri has been around for a very long time, and Siri still is not that good. I mean, the self-driving that currently exists, don't get me wrong, is amazing. Siri is currently amazing, but it's not efficient enough that it can just take on the human symbiotic world and, function normally without intervention, because there's just things that it can't predict right now, right? So my biggest fear is that what we're going to see evolve with self-driving is it's going to be very tame in the beginning. Google's already doing self-driven vehicles, but they're very different in how they operate because they're very use case specific. So I don't see Google having scale in what they're doing, but that's the same thing that I'm concerned about with Tesla is for the next 3 to 5 years, there's just not going to be capable scale outside of certain use cases where they know it works because it just takes too much data. And even taking in all that data doesn't mean the software can appropriate it in a manner where it doesn't run into issues at some point down the road. I know so many people are bullish on Tesla, man. I love it 9 ways to hell. I honestly think in the future they can make a ton of money off the cars as it is. They're the Apple of vehicles, but it's just paying the value on it today is just absurd. And I, like I said, I have this back and forth angel and devil on my shoulders if I should just liquidate the stock and just be patient and wait for this stuff to come into fruition, even if I have to pay a premium in the future. So long as we know they can make money off self-driving, so long as we know the robotics are actually becoming advanced when they release that at the end of next year, then it might be appropriate to buy back in. But for now, there's so much speculation of this value. How can you feel that and hold the stock? Well, because Tesla to me is like a playing cards. I mean, when you're buying growth stocks, guys, they don't really trade off fundamentals. I mean, no growth stock. Do you think Nvidia is trading off fundamentals here? You think Amazon's trading off fundamentals here? I mean, they're like playing cards. They're just large cap companies. And, if someone thinks they're hyped and valuable and they have a big future potential, they're going to pay a premium for that playing card. I mean, that's what stocks are. Stocks are just supply and demand. I mean, it's not like they do have some correlation. When we get to the dividend topic, that's where I would be more concerned about fundamentals. But when we're talking about Facebook, Amazon, Google, like they just need some good growth. If they can get good growth and hype, then they go to the moon. That's how it works. They always go to the moon. Tesla's got a fanboy base, right? So that's what I'm trading it on. When you buy Tesla, you aren't buying Tesla as much as you're buying Elon's drive and ambition, 100%. I mean, you're buying the next Steve Jobs is what you're doing. And honestly, if you can hold on to it for 20 or 30 years, I don't think you're going to go that wrong. The branding power could sell shit on a stick. I mean, did you guys watch the Gigafactory in Texas open up? The lineup just for the merch was like out the door. I mean, Tesla's a branding powerhouse, but again, the problem is all of that is valued for the next 3 to 5 years. And the only way we're going to moonshoot again is off self-driving robotics. And that's so far out from now that like I just don't know if I want to sit on it and take on that presumed risk because again, that hype can burn out and the stock value could drop in half and it's still insanely overvalued. So I mean, you're making an interesting bet, and I wouldn't bet all the horses, or I wouldn't bet I'm messing that up because I'm reading the comment there. You're betting on the jockey, not the horse. Yeah, that's the thing, right? I mean, he's still pushing Doge. Do you see Dogecoin pumped up because at that Gigafactory when they had the grand opening, there was a big Doge introduction of just the image, and it actually pumped the Doge price, which was intriguing. But putting Tesla aside, I don't know. I have an angel and devil on my shoulder. I don't know if I'm going to sell it, if I'm going to keep it. I argue with my girlfriend about it because I've been in it so long, maybe keep it for nostalgic reasons, but I'm kind of like a core fundamental guy at the base bottom of my heart. Usually I don't hold speculations long into the future. So I've been holding Tesla since 2019, but God, I've made so much money. Who cares? I can come back in the future and overpay for it then. But nonetheless, crypto real quick. Speaking of Dogecoin, let's talk crypto real quick. I'm working with a company right now, guys. It's called Liquid Meta. They had 10% of their liquidity exposure to a company called Ronin. The Ronin network. I don't know if you guys missed this over the last week, but they got hacked and $600 million worth of Ethereum and USDC vaporized and gone. Luckily, they didn't lose any capital, but I got to do this fascinating interview. And it's not live yet. I was going to share the video because it was just such an intriguing topic to talk to somebody that has to deal with this in the media. Yeah, just these crazy hacks. And I just want to reiterate, because I know most of you are either super divided on crypto, and I'm not like the biggest crypto fanboy here. I still got my Bitcoin. I'll be holding that into the foreseeable future as a technology play. Don't really care what it does. I kind of set it, forget it, like I would be buying gold. It's just one of those assets that you buy, don't even think you own it, forget about it, come back to it in a decade. We'll see where we're at. But nonetheless, guys, when you're playing in the crypto space, a lot of people keep asking me like why I don't stake it, why I don't try and cash flow it, because I don't trust the networks. There's so many hacks, there's so many problems. And if it isn't insured, if the company doesn't have insurance, and we talked about this in our chat group recently, Wealthsimple, a company in Canada, they let you buy crypto as a third-party holder, but they are fully insured against losses on their end. That is the only way you can hold crypto through a third party. Even the exchanges tell you not to keep your crypto on their platforms because you don't own the crypto when you're doing it that way, right? So personally, if you're Canadian, I don't know about the US, but I'm still using Shakepay. Shakepay has been giving me and my girlfriend like over $1 free crypto every single day. Like we're literally making a free coffee a day. It's the equivalent of having 10 grand invested at 3%. If you guys sign up through the affiliate link, you have to come in through an affiliate. I mean, it helps me out if you deposit $100 because you make $30. I'm leaving the link in the description. I've talked about this many times, but just use the free platforms. There's so many promotions to get free Bitcoin. There's credit cards. There's literally like you can go on to these promotions and just listen to SoundCloud ads and music and get paid in crypto. So I mean, I don't believe in staking. I know you can get 8, 10%, whatever, but I'm happy making my little incremental amounts, make 300 to 500 a year doing nothing with no risk, than do it the way other people are doing it. Because there's just far too much risk in NFTs and all that stuff right now. It's far too speculative. But if you can make free money, I mean, there's a lot of opportunity to make free money all over the crypto space. So just take advantage of that. That's how I see the crypto space as it stands right now, guys. So I mean, that hack blew my mind. That's the problem of crypto, not a cold storage, not your crypto. But if any tragic event happens, the wealth is lost. That's the thing, right? I mean, the beauty of it is it's decentralized in your control and no one can take that from you, especially in these times. Lots of mistrust in the dollar, inflation, Russian ruble, all that stuff. Crypto has a place in this market. Problem is people are stupid. And stupidity is always what's going to lead against the crypto runs when we're trying to get institutions to onboard. So anyways, that's crypto. Let's move on here. Let's talk about the dividend stocks because I feel like it's what most of you guys are probably here for anyways. So I am trying to get to my goal of $1,000 a month in dividends before I'm 30 years old. That date is coming up relatively quick, but I do have a lot of opportunity and a lot of cash flow sitting around in other aspects. Like I'm holding the ETFs that I don't really need to be holding. And I'm going to talk about my feelings toward ETFs in a second, because many of you know I don't like ETFs. I primarily use them as parking places for short-term capital. That's what I've been doing with VYM. It's what I do with S&P 500. I don't like index funds. I never have. Every time I buy them, I always get itched on them because I'm like, a lot of the companies in there I think are overvalued. So I'm like, why do I want to hold this? Like, it's the problem with the S&P 500 right now. I know a lot of people love VOO. A lot of people want to stick to that cost average investing lifestyle. I get it. But when I look at the top 10 holdings in VOO, I'm like, there's only a handful that I'd personally like to own. So I don't really want full exposure to the ETF. That's what I'm trying to do with my VYM right now, because I do like the dividend ETFs, but I'm like, the top weightings, when I go through them, I'm like, I could really just pick out 10 of these companies and be much happier than owning the index and paying the fee. So right now, when it comes to the dividend world, guys, I have a list. Many of you know that I've recently started buying McDonald's stock. I'm a little concerned about the shutdowns in Russia because it's about 2% of their global stores. So I'm trying to hold off to earnings. But the problem is these stocks are rallying already. So I really want to get starter positions in them. And then I'll answer some of your dividend stocks. Are you buying Russia? Yeah, right. I watch, if you guys want to get entertained by some stuff, go watch the Russian vloggers, go watch like the Ukraine vloggers. It's crazy seeing two sides of this, because I feel like a lot of these Russians, like, they don't want anything to do with what's going on in the propaganda and the bullshit they're being fed, but they just, like, a lot of them are leaving the country, right? I think there's tens of thousands of Russians going to Bulgaria and any country where they can be accepted because of the pure destruction of a man that needs to be hung or shot tomorrow. I mean, there's no coming back from this. I mean, he's crossed the point of no return at this point. We'll talk about that in the future market stuff, but still. So my list of dividend stocks, ones that I want to buy right now, guys, JP Morgan. I don't have any real US bank exposure except through the index fund. And I've noticed they've been selling off pretty aggressively lately. I think there's a lot of fears to recessions, lower guidance, blah, 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 blah. Even though I mostly proponented to Canadian banks, I like the Canadian economy a little bit more because I can grasp it a little better. I still wouldn't mind picking up JP Morgan here, 3% dividend yield that is trading well off its highs. I think it's becoming a good buying opportunity. I started buying McDonald's. I want to get more McDonald's. I want to get Procter and Gamble. I just wish they would stop rallying. I wanted to pick them up on the dips. I missed some of those opportunities. I might just put a starter position in them for now and just see what happens, because I just want to get through earnings. This first quarter earnings is going to be really prevalent to what's going on in the global logistics nightmare and the Russian-Ukraine conflict. So I just need to get to earnings. I hate waiting for earnings, but that's when I get the framework of what the hell's going on here. So we got JP Morgan, McDonald's, Procter and Gamble. I'm looking at Home Depot. Home Depot is one that I'm on the fence with. I really think that we're still seeing a big housing crisis. The Canadian economy is coming down on the housing market now. Interest rates going up. No more foreign buyers. They're taxing the crap out of people flipping homes. I mean, we're introducing a new savings account in Canada. But the problem here, guys, is if we get a cyclical slowdown in real estate, which for the first time in Canada, we've seen a decline of month over month for the first time in years, that it hits the housing companies. I mean, they all get slaughtered, right? We're seeing it in Home Depot, Lowe's, etc. The thing for me is I think Home Depot is probably one of the most profound dividend stocks of all time. I still think we're going into a period of insane development, and I still think that the Home Depot is going to be a well-used thing. I'm just worried about the short term here, and I think it's going to get hit depending. I mean, it's already gotten hit. Some of that's priced in. So I see it as a good buying opportunity, as one I might start a position in with fear that it still might go lower depending on if people take a breath from housing. We could get this intermittent fasting from the housing market where everyone just stops for a moment just to see what goes on, and repairs slow down, flipping slows down. But oh man, Home Depot, their dividend growth is probably one of the best dividend growth stocks of all time. I mean, their yield growth, I think, is like they've over doubled it in the last decade, like tripled it. It's kind of nuts. Banks, really? Did you watch Big Short? Banks are a black hole. None sees what's inside. The risks could be huge. I mean, most of the banks are FDI insured or whatever. I mean, Canada Treasury backs the banks up to whatever amounts. Banks are banks are banks. My reason for investing in banks, and I always say this, if the banks go under, I mean, your trading platform is coming from a bank more than likely. I mean, everything you use is related to the financial system. If the mortgages crash, the housing market crashes, trust me, you're not going to be worried about your stocks. If the banks go down, the last thing you're going to be worried about is your investments in your money. That's the thing with banks. I mean, they're the fundamental friggin' factor to everything we do in life. If they go under, it don't matter. Money doesn't matter anymore. You better hope you have crypto and gold, because that's the only thing that's going to matter if banks go down. And to me, they've been cash flow machines forever. I mean, the Canadian banks, to put this in perspective against the US banks, they've never cut their dividend through any financial crisis, not through the 2008 financial crisis, not through the March 2020 crash. They never cut their dividends. They've grown consistently year over year. They've increased their dividends consistently year over year. The Canadian banks against the US banks are always my favorite, but I like having both sides of the border exposure. So man, I'm really good on I love the banks. But anyways, so we got our list: JP Morgan, Procter & Gamble, McDonald's, Home Depot. On the Canadian side of the border, there's two companies that I'm looking at to continue to build up my telecom sector, because I have Verizon now, I have TELUS. TELUS, by the way, what a growth stock. Who would have thought the boring telecom sector could grow so substantially? I did, baby. I've been buying TELUS for a while now. I love TELUS. TELUS gives me exposure to the telehealth sector, obviously the 5G and the fiber optic networks, the fast growing economy that is Canada. God, that thing is printed for us lately. The thing's a crazy growth stock. So I want to add Bell. I got Verizon. I think Verizon's a good discount buy here. It's in every ETF. Warren Buffett owns it. Verizon's a boring ass collect your dividend kind of stock that I love. I don't understand the US economy when it comes to telecom, so I'm kind of buying it blindly, because obviously these are infrastructure stocks. They're highly debted. They do come with that kind of risk, but that is the facet, unfortunately, of financials and telecom and infrastructure, right? Like if you're looking at utilities, you're always going to be buying highly debted companies. It's just how they operate. So, I mean, they work on a different fabric of valuation when it comes to the balance sheet side of it. But anyways, I'm looking at Bell. Bell is becoming another growth beast here. I don't like that it's trading up so much, but it pays a 5% yield. Finding it very appealing because I just don't have enough telecom exposure, and the yields are just far too amazing. So I'm really intrigued by that. Very intrigued by that. And I'm going to get into it because if you're into banks, what do you think about SoFi? Did I skip over the small cap opportunities here? Because I want to talk about small caps in a second. And SoFi is actually in that list of my small cap questioning here. But still, let me just finish up with this. So we got Bell, and I'm also looking at Power Corporation of Canada. The POW is the ticker. This is kind of falls in suit with insurance companies, because I have no exposure to insurance in the financial sector. And I noticed that Power Corp was one that came up on Brandon Beavis's channel. His dad was talking about it, and I found it kind of intriguing because they own a huge percentage of Wealth Simple. They have global exposure to life insurance, retirement funds. It's a massive company managing, I think, over $1 trillion globally. European, Asian market exposure. They just don't grow. That's the problem with those insurance kind of companies. They don't really grow, but the yields are nice. So, I mean, I'm thinking about adding it as just a pure dividend play, but so again, just to reiterate the dividend list: JP Morgan, Procter & Gamble, McDonald's, Home Depot, Power Corporation of Canada, and Bell Telecommunications. And again, those are just my lists. You got to remember, I already own a ton of dividend stocks. A lot of people are like, oh, what about this and that? It's like, well, if it works for you and you feel that it's a fit to your sector allocation and your diversification, by all means, these are the ones that I'm just interested in currently. So let me roll back a little bit because I think I skipped over the small cap opportunities and where I'd be paying attention here. SoFi is one that has been coming up a lot in conversation because it's been trading down so aggressively. I've been looking at a lot when it comes to like obviously the vegan food space, because obviously you got financial education talking about a tattooed chef. There's a lot of intriguing opportunity from a valuation standpoint, but the problem with the market right now is if it doesn't have positive EBITDA, it's getting absolutely slaughtered, right? Like these small caps are getting basketed together, and even the good ones that do have EBITDA, they do have great future growth potential from an actual earnings perspective. They're kind of selling off in the same moat. So if you're into those kind of companies, there's some great opportunities right now. In my opinion, the problem is I don't want to rush into them unless I'm confident the sentiment's changing. If you think you can get a lottery ticket and you have a percentage of your portfolio allocated for that, I think SoFi is great. Palantir is great. I mean, a lot of people are into Hyliion. Ouster is another like one of those LiDAR plays into self-driving. But to be honest, the risk right now, I don't know if it's worth the reward necessarily, unless you've really done your due diligence and they're just companies that you really believe in for the long term. Remember, 3, 5, 10 years out. Don't be thinking short-term plays on these because we just don't know how long we're in a bear market. Realistically, we're in a bear market here, folks. I mean, if you look at the index fund, you're like, oh, things are great. It's like, no, things aren't great because if you tear the index apart, a lot of things are trading down 30, 40, 80%. It's just been a different kind of a bear market we've never really seen before. So unfortunately, right now is a flight to safety. So this is why we're seeing things like Procter and Gamble do so well. Any company that has real growth potential, that is a large cap, that is a safe haven for index funds and global what are those just global retirement funds, all of those people, those are the people you got to play with. I mean, BlackRock and Vanguard, I think, pretty much dominate the world when it comes to index fund and global money management. I think they manage together something like $7 trillion, which is what, like half the entire US's GDP for a year. I mean, it's a stupid amount of money. It's a stupid amount of money. So you got to pay attention to where those funds park their capital because those are the only places that are going to do well. That's again, why do you think Procter and Gamble is going up? How does Procter and Gamble trade at 28 PE? How does Costco trade at a 50 PE? How do these companies that don't have tech-like growth trade at that kind of growth PE multiple? Because they're safe haven companies. They don't get better. They're the most world-renowned companies, and that's where hedge funds park their capital. Valuation doesn't necessarily matter when we're talking about, these things. Stocks are like trading cards, right? So Cole's going 40% VOO, 40% VDY. I mean, you can buy index funds that do give you exposure as well to small caps, which is also a good way to appropriate small cap stocks, or buy VTI. VTI will give you all the small cap and the large caps. Because I don't think you should shy away from small caps. I mean, there's great money to be made in those things. I still love a lot of them. I still love the psychedelic sector. I still love the healthcare sector. I am just highly particular about how I manage that in this current environment. But honestly, like I wish I could be an index fund investor, man. Every time I buy them, I end up selling them because I just own all the weightings that I like. I literally own most of the top 10 VOO weightings. So if I'm just buying VOO, I'm just continually top weighting the companies I hold. That's just me personally. I'm glad you got some gold though. I think this is a good market for inflation hedges. Oh, by the way, small caps. God, I almost forgot this. If you want to make a fortune in small caps right now, because he just brought up gold, I'm telling you, the commodities market is going to effing print in the next 5 to 10 years. I don't understand commodities to a large extent when it comes to like the junior miners, but there are a lot of them that are currently profitably mining and their stocks are trading down massively. Like, yeah, Gold Mountain. I've been talking to so many uranium miners. Like, uranium just hit another freaking decade high. I think it's over $60 a pound. I mean, you can get into Uroy, and they're already like they ran up and then they sold off. I mean, you can get into Nutrien, like that's a Canadian fertilizer company. I mean, anything commodity based right now, I even like oil related stocks. I know a lot of people are like, oh, oil. It doesn't even matter if oil comes down in value. The commodity right now, if you're buying the right companies, are so underrated because of these global mess ups. Like Russia was a huge supplier of the global oil market. And even though India was like, oh, we'll buy your cheap ruble Russian oil. Well, guess what? It ain't reliable because they're in a war and the Ukraine just bombed one of their major oil depots. So I'm like, I don't think people appreciate the value of commodities in this market right now. Yeah, lithium is skyrocketing. Copper is skyrocketing. fertilizers, lumber is still extremely expensive. I'm like, you could throw a dart at a board at the small cap commodities market, and something tells me in the next 3 to 5 years, you're going to make money. You got to make money. I mean, talk to any CEO, listen to any earnings call from these small cap, anybody in the commodities market, even the large cap commodities market, and their mouths are drooling because there's so much demand and no supply. So if you have any supply at all, you're selling it at massive margin multiples here. It's kind of nuts to think about. I mean, it's part of the commodities or the small cap sector that I've been intrigued by the most. I just have a hard time outside of, I bought Enbridge. It's my kind of oil play, and it's still going up. I mean, it's still going up from where I bought it, and I bought it at a really high value. But yeah, man, I'm more proponented to large caps. I like playing around in the large cap world. I feel a little less concerned. But God, if you want to print, man, if you're looking for small cap value, SoFi, highly on, all great companies. But I'm telling you, man, commodities are going to print if you understand the commodities market or sector of it, anyways. Great place to proponent an aspect of your portfolio. So, putting all of that aside, let's talk about where I see the market moving forward, because obviously commodities are a huge proponent to that. I think commodities are going to print. I think if oil stocks take a dip, buy them. If any commodity stock you like, if you understand the market, buy it. Lithium America Corp. You can get into all the graphite and nickel and battery metals. I mean, nickel had a short squeeze. They're the new FANG stocks. Let's be real. Commodities are the new FANG. Even though some of the FANG stocks I think are good buys here, Facebook, Netflix, et cetera, whatever. I think they're trading down. But when we talk about moving forward, there's so much uncertainty in this market that scares the crap out of me. Me and my mom are having a very lengthy conversation about this over the last couple of days, because I have a big concern with Russia and this becoming a global war. And I don't know what that's going to do to the market if it happens. It's kind of scary to discuss, to be honest, because basically Russia's been pulling a lot of troops back, but honestly, they've devastated so much of those areas already. There's nothing saying that they might not try biological, nuclear warfare. And I think they've already stepped over the line into what is being called genocide. I mean, it's up to interpretation, but it's disgusting at any level. And unfortunately, the United Nations are getting involved. The private investigation is probably going to be done in the next few weeks, a month, and whatever they decide to do after that is going to lead to critical things in the likes I've never seen in my lifetime. Stuff that I thought we would have been over by now in 2022. But if this becomes a global war, it's going to get bad. So the only good thing that can happen is Putin just suddenly drops dead. That would be the best case scenario, unfortunately, but I don't think it's going to happen. So that's probably my biggest fear in the market. Nobody wants to talk about it. I mean, nobody's talking about it. It's kind of disturbing to me that, me, Kevin, nobody wants to mention it. It's just like the biggest red flag right now to mention for any financial investor. And I don't hear it really outside of like CNBC. So, I mean, so Army stocks will print. Lockheed Martin 100%. I don't play those. I used to own Lockheed Martin. I wish I didn't sell it. Actually, I think Lockheed Martin is an incredible company. I think they're gonna do great. They're gonna be fine, especially considering this stupid shit that's going on. So even at these levels, I buy it if you're interested in the Army plays. I don't like playing them personally. I don't like getting involved into the defensive stocks. Just personal preference. I got nothing against people that want to get involved in them because they're obviously well needed here. They're going to print like big time because, like I said, if this becomes a global problem, Lockheed is going to be highly needed. But yeah, I just wish more people would like shine a light on the severity of that problem, because it feels like it's getting more exacerbated in a bigger problem rather than a lesser problem. And I feel like that's going to have the highest impact on the market outside of inflation. Now, honestly, when we talk about inflation, I really think inflation is going to start to peter off. I think the fact that we're starting to see the final cool down in the housing market, stocks have been taking a big breath. I think earnings, depending on how this earnings cycle go, we could see a bit of a pullback in maybe Apple, some of these still kind of high flying large caps. That might be the final pullback where these companies that have been like really scathing through this cycle might finally see the big dip. And if we see that pullback, I think that'll be a good sign that, we're coming to the end of this bearish kind of market. Again, depending on how the geopolitical events go, because I just can't see inflation going much higher than it has now. Because I don't know, I just feel like I could be wrong, but I just don't see these commodities like lumber continuing to go up 30% a year. I don't see housing going up 30% again this year. I mean, those are some of the biggest proponents to inflation, right? So they might not come down, but they'll level off because we just won't keep seeing them jump up like they have. So I feel like the inflation risks will start to level off in the second half of this year. I don't see any issues with that. And outside of maybe just the housing market cooling down and all the big, large companies finally cooling off a bit. I think these are great buying opportunities in the market. So, like I said, for me, the biggest fear is the geopolitical issues. And putting the geopolitical stuff aside, if you guys want to take a breath and actually watch some fun, entertaining movies, God, they've been releasing so many good docs that are business related lately. We Crash. I've been really getting into the We Crash stuff. I don't know if you guys know WeWork. When I was younger, I got invited to work at one of the WeWork offices in Canada. Never really did it, but now that there's a whole documentary on it, crazy fascinating story there of just, basically, I heard a real cool saying that exuberated confidence is more valued than somebody that actually has a real business, because if you can sell anything, you can make money. It doesn't matter if you have good confidence and you can exuberate a story, you can print. That's like the whole WeWork story, and it's so great. It's still coming out, but I recommend watching that. My favorite show of all time right now has got to be Severance. Severance is this really incredible concept, guys, where when you go to the work office, they implant a chip in your brain where you don't get to know what you do at the office, and it severs your life from your at-home life and your work life. Unbelievable concept. Ben Stiller directed it. Oh God, I love it. Apple's doing an incredible job in the streaming space right now. Most of these are coming off Apple. And then finally, a bit of an older series too. If you guys ever watch Inventing Anna, is a really good one as well, because these are all like kind of, I don't know, Inventing Anna, We Crash, very related to real life people, and then Severance is just a whole nutty business concept that I can't. It's like almost Naziistic. It's so wild. Watch HBO's Billions, amazing show about how shit goes behind scenes. That's another really good one, actually. Yeah, Billions is one that we started watching a little while ago that I got to catch up on. That's Elon Musk's story. Yeah, the WeWork story is really almost reminiscent of Elon Musk. I think Musk, because they're positive EBITDA, they've got over the hardest part of their business. I feel like I wouldn't have wanted to own Tesla post 2018. Tesla almost went bankrupt. I mean, they were such a risky investment up till like the last little while, and now you're just paying an astronomical valuation for it. But yeah, I really feel like there's got to be a document. I mean, Elon Musk is a living documentary. Let's be real. The dude is just a living entertainment show. They're not positive EBITDA if you deduct the credits. I don't think tax credits matter, man. I honestly think Tesla's going to print. I mean, you look at what you have to pay for self-driving. That's just software, right? I don't think they're losing money on their software anymore. I think when you spend $10,000 to get self-driving in your car, that most of that hits the bottom line of the vehicle. I really don't even think they need tax credits. I think they're well beyond that at this point. And plus, they can sell merch. I don't know why they don't sell more merch. Every week, Tesla should do a merch drop. They could sell it for way more than they sell it for. I mean, they're selling shirts for like $30 for Christ's sakes. Like, I mean, mark that shit up. Those could be $200 sweaters. They could be printing off that. I mean, not that they care. They don't need the money. I mean, Tesla could just snap their fingers and raise $1 billion tomorrow. They're not Tesla shorts. Yeah, I wouldn't short Tesla by any metric. I think that's the most insane thing anyone can do, which reminds me of Michael Burry. Michael Burry still holds his GEO group, by the way. I think that's so funny. Michael Burry, man, I always find it interesting how fixated people get on speculators and gamblers. It always bothers me aggressively when people are like, "Oh, this guy's a genius. He made $1 billion doing this crazy." It's like he's an idiot. He's an idiot that got lucky. I mean, Bill Ackman, like I think Michael Burry's my least favorite investor because people idolize him, and I don't see everything I've watched the guy do is gambling. It's highly speculative investing, and it highly relies on the market doing short-term things that no one can actually understand. It's like Meet Kevin. Meet Kevin to me is just a short-term speculator. Everything he says is null. I mean, anytime I talk about forward-looking information, I don't know what the hell I'm talking about. I don't know what happens tomorrow. Nobody knows what happens tomorrow. And then they pretend like they're right when it works out, right? And it's just like, well, one news event could have changed that entire outcome. Like it's pure speculating off like roulette odds. Like you're looking at 60, 70% chances these things working, 40% chance these things go wrong. And I mean, you're just playing 21. That's all we're doing here. If you're literally if anybody tells you they know what's going to happen in the next year, the next 3 months, the next whatever, they're gambling. And some people are good at it. Some people are good at playing the odds, right? And that's day trading. Day trading is playing the odds. But I don't know any real day traders outside of maybe one or two. Like what's that guy's? I can't remember his name right now. But I watch people like Everything Money. Everything Money is an example to me why like value investing doesn't always work. Everything Money is also a prime example of why day trading doesn't always work. I don't know. I love their videos, but when you look at their rate of returns, they absolutely are abysmal when it comes to investing. And like this is coming from a guy that, no offense, and I'm not trying to brag here, but I'm outperforming the ARK Innovation ETF, and I have been for several years. And I'm not a genius. I just understand that there's more to the stock market than value investing. And that's what I think people get locked in, this one idea of investing, and think that's the end all be all, rather than just kind of absorbing it all like a sponge and realizing there's a lot of different facets to make money in the market. And it doesn't have to be speculative by nature, right? Like they're like trading cards. Like you can't just say this is a shit company because they're overvalued. I mean, you would have missed out on the greatest growth stock of your generation, Tesla. If you sat there and said Tesla's a stupid company, I'm never going to invest in it, well, guess what? You missed one of the greatest brands in history that has made thousands of percent, and you watched a company that was worth 10, 20, 30 billion go to becoming worth $1 trillion in just under a few years. So clearly, if you're against Tesla and you miss that opportunity, you sure as hell better learn from it. You sure as hell better learn why that happened and recognize what would cause that to happen again in the future, because that's how I've made most of my money. I mean, I made that off Canopy Growth Corp. I got into the legalization of the MJ sector. That was no brainer money. That didn't take a genius to figure out. You just say, hey, they're going to legalize these things. We know they're going to legalize it on this date. Why not just buy a couple of these companies and see what happens? Well, the hype came and the hype made you rich. Same thing with the psychedelic sector, same thing that happened in 2021. All these things become very hype. And the idea is recognizing it before it happens. It's just very hard to recognize. The opportunities are far and few in between. You can't go out and just pick one of those every day. It doesn't happen overnight. That's the scariest thing, right? If you miss Tesla, like it could be years before you find another one of those kind of companies. And whether you actually have the knowledge to recognize it when it's happening and buy into it, right? Because right now we're in a value market. The dividend stocks is where the money's at. I'm sorry. The days of speculative growth. I mean, go look at Johnson and Johnson hitting all-time highs. Procter and Gamble starting to push back toward all-time highs. Like you could throw a dart at any of these large cap dividend stocks and you're outperforming the market. That's the new trend that we're in. So, I mean, if you recognize that, it's easy to make money in this market, right? Everyone will be like, oh, but there's value in Facebook. Oh, there's value in this. And yeah, there is. Absolutely. But that's not where you're going to make money right now. If you're trying to play the trends, like there's no money in that. Yeah, the MJ market tanked for sure. I don't know if the US legalization can push those stocks after what's happened here. I really think the market has had the sediment now. It's not like when Canada first did it. So I don't think there's this nuanced feeling anymore. I think people are skittish of it after seeing how this has evolved. So I don't think we're going to get the same kind of cannabis explosion that we had in the past. It was kind of a one and done. Yeah, that's the thing. Same with Tesla. I think Tesla's kind of a one and done growth stock. I think from here in the next to 2030, Tesla's not going to do what it did. You might be able to 2x or 3x your money on Tesla in the next 3 to 5 years, but that's it. I mean, it might be able to run to a $2 or $3 trillion company if you're lucky, and things go perfectly. But the likelihood of it devaluing, I think, is greater than it in like having another doubling in the next 3 years. I think it's just highly unlikely it does that. Like I said, I'm not trying to jam this stuff down your throat. I find people get so like concisive about one style of investing. A day trader is like, I can't be in the market long term. It's too risky. I'm just going to play this, and this is what I become comfortable with. Value investors, like Charlie Munger, Everything Money, they only live in that mindset, and they underperform the market year under year. Kathy Wood only plays one style of investing, and it hasn't worked out in this market, right? I mean, if I was Kathy Wood, it's hard to shift from innovation, but my God, like, the money is in commodities and dividend stocks. That's the money maker for the next year here, at least. Like you can't lose. So I don't know. It's so easy to recognize this stuff. Maybe I've just been in the market long enough to understand this. But like, I mean, most people just want to cost average into index funds. And if that's you, by all means. But like, there's a reason that my list of dividend stocks are like, I mean, it's just crazy. We're seeing stocks that never performed crushing it. I mean, like telecom stocks were dead. And like now I'm looking at a lot of these things flying to all-time highs. Energy stocks were dead, all-time highs. Commodity stocks were dead, all-time highs. I mean, it's not rocket science to see where the money's going. Psychedelics look better for long-term. Yeah, so when it comes to psychedelic stocks, I've mentioned this in the past, guys. Take a breath on them. If you're going to buy them like a lottery ticket, and just know that like in the next 10 years, the likelihood of them being like one of the largest medical segments is like 90% sure. I'm 90% confident psychedelic stocks will be one of the largest segments in the healthcare space in the next 10 or 20 years. There's no doubt in my mind. It's just a matter of how you play them. I've constantly thought about getting back into them. I mean, I have family that still owns MindMed. I'm looking at Wasana Health Holdings. They've been a sponsor of my channel. I really like the attention they get because the guy was a two-time Stanley Cup winning hockey player on the Blackhawks, and he used psychedelics to fix his brain injuries. I mean, those kind of stories are coming up time and time again. But if you want to play the lottery game, I mean, that's what I think the healthcare space is right now. But I honestly think healthcare is going to yield the best returns probably in the next 10 to 20 years. I mean, we're talking about cures to cancer, pig organs being transplanted into humans. Mental health, by far, when it comes to psychedelics, is one of the largest drug segments already with the antidepressants, ketamine treatments. I mean, those drugs are literally some of the largest drug segments that exist right now, and they suck. They're terrible. So I think those companies will replace them over time. What do you think about Facebook and their metaverse investment, wasted money or big potential? I think my biggest problem with Facebook, as I mentioned at the beginning of the stream, I think they have a huge moat. I literally play the VR every other night. I'm obsessed with this thing. Absolutely love it. I think it's a future for them. My biggest fear, though, is when I bought Facebook, my understanding of it was I'm buying this fundamental growth business that is concrete. And then I have the luxury of the cherry on top of the cake is this growth vector that right now doesn't make money, is costing billions of dollars, but I think it's the future. Now I have a concern that their fundamental business is degrading rapidly. I am absolutely petrified that their primary income source is going to get slaughtered to TikTok. I don't know what's happened to the big boys when it comes to YouTube, Instagram, WhatsApp. I mean, Instagram and WhatsApp are still growing platforms, but the problem is conversions. Like I said, I listened to the earnings calls and they literally said the thing that pissed me off the most on that last earnings call, which was the worst one I've ever heard, is that we are seeing small business conversions slow down. That is a scary thing when 99% of your income comes from small town America and ad budgets on your Facebook platform. So I'm kind of concerned for Facebook in the near term, but I'm long term bullish because of the metaverse stuff. I think they're going to crush it. I think they're the industry leader, to be honest. Outside of that, folks, any last questions? I'm going to finish up here and go take it easy. I hope you guys enjoyed this breakdown of my growth, my crypto, the dividend strategy. Many of you will see me over time continue to scale down my growth. Like I said, I don't mind pulling out of Tesla and then buying back into it at a later date at a higher value if they prove out self-driving. I don't mind sitting on the sidelines with Facebook right now and just seeing what the next earnings look like. I wouldn't be rushing into it. I know it's cheap. It's definitely cheaply valued. But if I'm going for cheap and I'm looking for growth, Alibaba, China, that's what I'm betting on there. But if you want easy money today, like if you want to trade money, I would be looking at commodities, dividend stocks. That's where the short-term growth, that's what's saving my entire portfolio right now. I'd be really terrified for real estate in Canada. I don't know about the US, but real estate's going to become an iffy game just because of interest rates and government control. Giving the 21 split for Google and Amazon, which one would you pick to put 20 grand in? If you're betting on the split, because they're all splitting, I mean, Amazon splitting, Google splitting, Tesla's going to do a split again, like 90% sure they have to vote on it still, but at the next shareholder meeting, coming up in a month, I'm sure it'll get voted through. To be honest, I maybe just sprinkle a little bit of money into all of them if that's your game plan. Because I don't like to say that it doesn't work. I'm like, I don't want to gamble on that because I don't think it's going to work, but it historically works like 80% of the time. Usually 3 months after a company does a share split, the stock is up higher than it was before the split. So, I mean, I would just sprinkle a little bit of money everywhere because they're all overvalued. I mean, Google's overvalued, Amazon's overvalued. I know a lot of people are going to sit here and tell you why they're great companies and they're not, and you should own them, but they're not. They're overvalued. I'm sorry. They're all speculative based off future forward-looking income. So I just be careful and understand that. It's one of the reasons I don't like the S&P 500 so much or the QQQ ETF. I like the idea of the QQQ ETF. I like the idea of the triple leverage, the TQQQ ETF. But when I look at them, I'm like, I would rather own Apple, Microsoft, Facebook, Alibaba, JP Morgan, like even Berkshire. Like I would rather own Berkshire as one of the top 10 holdings in the S&P on its own as an ETF rather than on the S&P 500. Because I just feel like if you think those companies are overvalued and you think they're going to have some trouble in this market, it doesn't take one bad earnings period to bring the entire industry down, like the whole index fund. So I'm like, Apple and Microsoft make up over 10% of the entire index fund. and I already hold them individually, right? So if I'm going to take a hit on them, I'm going to do it personally, and I'm not going to over leverage that way. Been working with Gold Mountain in it all lately. Any particular thoughts on them? I like Gold Mountain. They have an intriguing business model because they're using third-party refiners. I've noticed a lot of precious metal and commodity stocks or miner stocks are doing that lately. They're using refinery companies are another interesting play, by the way. You want to get into commodities? Off the top of my head, damn it, I had one written down. I was working with them. What was their name? Yeah, the third-party refineries are a real interesting play for the commodities market because most gold companies, precious metal companies, lithium companies, they have to send them to refiners, and those refiners, yeah, you don't get the upside of the margins on the product, but you get the consistency of knowing there's always demand, right? So that's another fun play. But I like Gold Mountain. That's a good one to hold if you're interested in gold. Haven't bought any yet. I also think they're overvalued at this moment. Yeah, it's hard to say though, right? Like, I mean, God, the valuations in this market are nuts. Especially if you have this bipolar issue of listening to value investors versus growth investors. Like, I mean, meet Kevin the other day is like, oh, I'm buying Tesla. I'm going to buy Tesla. It's like, okay. And then you go to Everything Money and they're like, Tesla's worth $100 a share. It's like so funny. But anyways, folks, it's been a pleasure Sunday here. I really appreciate all of you coming out. What do you think about AMC buying shares in gold mines? I think it's hilarious. If you're a meme investor, if you want to speculate, by all means, but I'm not trading the GME. I mean, I feel like Tesla's one of the meme stocks. Shopify is one of the meme stocks. They're large caps, but God. Anyways, I really appreciate all of you coming out today, folks. I kind of like doing these live streams once in a while to ramble when my head's not fogged out. Usually I've been so busy lately, I get fogged out and I feel like I don't want to do streams because I don't think it'll come out appropriately. But anyways, I love you all very much. I hope you guys enjoy your afternoon. Go watch those shows. Best shows to watch, man. I love them. Severance, my favorite. Week Crash, amazing. Inventing Anna is a good one. And then somebody mentioned Billions. Go watch some business. You'll learn a lot. It's a whole different spectrum of the market. Maybe help you in your own personal business, but stay cool, stay awesome. And as always, folks, I look forward to catching you in the next one. Peace.